Good evening. I'm Peter Resnicek from ShadowTrader.net. This is another edition of the ShadowTrader Video Weekly for Sunday, January 2nd, 2022. This is the last ShadowTrader Video Weekly of 2021, so we look forward to a new year. And in this video, I'm just basically going to give you some ideas of what my mindset is going into the new year, how I feel about how these monthly charts closed out at the end of 2021, and a few little other tidbits along the way that you may enjoy. Without further ado, let's get right into it. This chart right here is the SPX monthly. As I always say, it's important to look at monthly charts, obviously, at the end of a month when the bar has closed. If you recall, about a month ago in the ShadowTrader Video Weekly, we talked about this S&P monthly, and we talked specifically about this bar here, which obviously was the November bar, which was a topping tail. And at the time I said, I pay attention to those types of bars because they are important only on the longer time frame. A lot of newer traders, when they first get into technical analysis, they fall into the trap of always looking for hammers or shadows because they think that these are powerful patterns. And they can be, but in my experience, I found that they really only have serious power in terms of playing out the way you expect on weeklies and monthlies. So I don't pay too much attention to that pattern when I see it on any time frame that's smaller. Now, that being said, as you can see right here in the monthly chart of the S&P, it did follow through a little bit underneath the low, which is what should have happened since it's a topping tail to the upside. But then what happened? Caught support right at the trend line and actually violated the top of the shadow and went straight through and closed higher. This can happen. Generally, that's a bullish signal when you get up above that shadow. And I think just seeing this dynamic play out speaks to the fact that technical analysis is not infallible, it is not perfect, and there will be times when patterns will get violated, when it simply won't work. The general consensus, common sense view, when you see something that looks like this, where you have the hammer to the upside with the shadow up, is that you would not go past this part. You'll get downside price action. We did get that, obviously, just a little bit in the month of December, but not very much. And then what happened, like I said, we violated that shadow to the upside. Where does that leave us going into 2022? Hard to say, but for now, at least as far as the S&P is concerned, a little bit more bullish than bearish, because obviously, as we can see, we closed that monthly bar up above the top of that shadow, which represents the top of that reversal bar that we had in November. Which brings us to the NDX, Nasdaq 100. Very, very important. Many of the stocks that I trade in and out of each week usually are more tech-oriented, so this matters a lot to me. And notice the divergence, huge. And we're just going to focus on the last two bars, November, December, like we were doing in the S&P. But look at how different the picture is. We have the same type of bar in November, topping tail to the upside, which we expected would give some downside reversal. We got a little bit of that as we went underneath, but then in selling off, Nasdaq actually caught a little bit of strength because it didn't make it down to the ascending longer-term trend line. It actually stopped in front of it and then rallied, but when rallying, wasn't able to make it anywhere near the prior high that was made in the month of November. So this is interesting. Really a mixed bag here in the NDX, 50-50, and this is going to be very important going into early 2022, is to note that this particular pattern is very, very hard for us right now to discern if the next move is going to be up or down. We've got a bearish bar for November, followed through a little bit in December, then closed within range in December. But most importantly, look at the actual pattern that you have here. It's shadow to the upside, shadow to the downside. So I call that opposing tails. When the tails are opposing each other, you have one down, one to the upside, and it's always very, very tricky. And of course, as I was saying as well, the close in December inside of that November range, so not really telling us a whole lot about the future of tech going into early 2022. And last but not least, I don't even know if we need to mention this, but since we're doing a year-end wrap-up on major averages, we should mention the Russell. It still hasn't moved at all. And the sell-off that came in December barely, and I say barely, even made it to the support line. And it is now, from here to here, it is now up to 10 full months in the same trading range that we have not moved. At some point in time, the Russell will break out. Small caps will either move aggressively to the downside or aggressively to the upside. We shall see at some point, I don't know when, it should be epic. Keep an eye on it. We need to see, obviously, getting over the high or moving below the low. Which direction that is going to be, I have no idea. Obviously, if you look at the longer term trajectory of the chart, you would expect that it would be to the upside, but anything can happen. If some stronger selling comes into the market, certainly small caps will follow, and it can easily lose this. The good thing about this chart is you know exactly where to get active and where you're wrong if it doesn't work, etc. Keep those balance rules in mind that we talk about a lot in the pre-market perspective. You know where your highs are, you know where your lows are. But for now, nothing doing in the Russell. And that's pretty much been the situation almost the entire 2021. Just nothing doing in small caps whatsoever. Okay, drilling down a little bit, and you should notice as I go through the video that it is a top-down approach. I like that approach in the market. Top-down approach in the market means that you start from the macro view, longest term charts, and you move into a smaller view. Here it is the same time frame monthly, but we are moving down a notch in that we start at the S&P index sector, and now we move into sectors. And I'm only going to talk about two, and if you've been paying attention to the videos the last couple of weeks, you should know which two they are. What is this? XLP, staples, defensive, and look what a month it had in December. That huge green bar there is the month of December. Huge outperformance of a lot of the other sectors. And as I've been saying in past videos, this is not what you want to see in a healthier bull market. You don't want to see these type of sectors leading. Which brings us to this one, utilities, the other defensive sector that I've talked about in past videos. And again, look at the bar. That's December. That huge, tall, green-red bar is the month of December in utilities. Where are they? All-time high and really chugging to the north side. And again, this is not the situation that you want to see in a market that is going to be sustainable and continue. You want to see the leadership more in the heavyweight S&P sectors, and I'm going to get to that in a moment as we drill down a little bit further. We want to see financials, technology, healthcare, etc. being more of the leaders, and we don't want to see these more defensive sectors being so strong. This could be telling us that it is a more late stage rally, and there may not be that much more gas left in the tank as larger players start to position themselves more into these defensive type sectors and less in the more growth oriented sectors such as technology, etc. Moving down a notch now to a daily chart. This is actually SPY. I'm using the ETF Spider instead of the S&P 500 index chart. They're really the same thing, but for these daily bars, sometimes they're represented better using the ETF. And I just wanted to point out that this is a very bullish pattern going into early 2022 for next week. But with the caveat that we really don't know how the market is going to act when that calendar flips. It happens pretty often that you actually get a bearish start to the year. Remember, investors are sitting on a lot of profits in 2021. It was a good, solid, bullish year, and they don't want to really sell those stocks and have a tax liability coming up in April. They'd rather push that liability out a whole nother year. So they're waiting to maybe take some money off the table, which they may do in early January. But if I had seen this chart on, I'll just pick an arbitrary other time, let's say it was the first week of November, there's no way that we can't look at this as anything but bullish. I mean, it's really a long rally punctuated by 4 days of nothing, just absolutely straight sideways, very, very tight price action. There's a lot of value in the profile that's unchanged, slightly lower value on Friday, but really almost nothing to speak of. And you can see very quickly, just at a glance, how much expansion of range there is here on the upside and how much contraction of range there is there on the downside. This is simple technical analysis 101. I think anybody should be able to look at this chart and know that it's bullish. But again, if it was some other time and we weren't flipping a calendar into a new year, I would literally just be buying any pullback I could see, looking for some price action that would just kind of stop somewhere between where we are now and that rising 20 MA, or just simply draw the downtrend line, connect the tops, draw the downtrend line, and I'd buy the breakout. As soon as that S&P moved over, I'd be looking at bullish SPX options trades and Fangman plus T, et cetera, et cetera. But again, given the time of year it is, flipping the calendar to 2022, I'd rather just take a more wait and see approach and see how this pattern plays out in the first couple weeks of the year. And now for something completely new that I truly hope you will enjoy. The chart behind me is what we call the quad. Obviously, we call it the quad because it's split into these four separate charts. And it is essentially the core part of the ShadowTrader methodology to better understand how the market is moving during the course of the day using market internals. So in a clockwise fashion, this is the breadth in the upper left, which is the relationship between up volume and down volume, that being volume that is flowing into up stocks versus down stocks. The advanced decline line, which is what I'm going to talk about today, which as you can see, for the first time in many, many years, looks completely different. And this is essentially the relationship between advancing stocks and declining stocks. Can be measured at the exchange level on the whole NYSE or on the S&P 500. Down here we have the ticks, which are of course super duper important, especially if you are a day trader. You want to be looking at that tick on the New York Stock Exchange and also on the Nasdaq as well to get a feel for whether or not moves are strong or weak, or if you're getting some sort of a changing of the guard. Some time ago, I can't remember how long it's been now, but we came out with an add-on called the cumulative tick, which is down here. That's been a big seller for us. A lot of people have written in over the years, told us it's a huge help to them. I think it's a fantastic add-on to the quad. And then of course here in the bottom right, you put your S&P chart, futures, NQs, whatever it is that you're watching or trading at that moment would go in here. Now, for the first time, again, in some time since we came out with the cumulative tick add-on, we have a new add-on that we are really excited to bring you. This is called the weighted AD line. Okay, and it's weighted because it is weighted according to the sectors in the S&P, how they are weighted. The normal AD line obviously puts equal weight on all of the stocks that are rather either advancing or declining. And like I said, you could look at an advanced decline line on a whole exchange, or you look at it just on an index. This is a weighted AD line of just the S&P 500. And the way we've constructed it is that we've given weight to each of the 11 sectors that make up the S&P, and we've plotted those sectors on a weighted basis and on an unweighted basis from the open. And that's really, really important because a traditional advanced decline line, if you just use your toss, for instance, and you wanted to know the advanced decline line on the S&P, it would be $ADSPD, right? That would just give you the advancers versus decliners in the S&P 500 only. So you might come out with a number of, say, plus 175 or minus 350. It would be some number plus or minus 500, but most importantly, that all of those stocks that are going into that measurement and that calculation, they are being measured from the prior day's close. And that's not as accurate and it's not as helpful to you during the course of the trading day. I've always been a big believer, and I've always been telling all my subscribers over and over, you want to measure as much data as you can from the open, not from the prior day's close, okay? So what this does, which is really interesting, and I'm about to show you how it's acted over the last couple of days, is it plots the 11 sectors in the S&P, as I said before, on a weighted basis and on an unweighted basis from the open. So if you just look at it just here before we compare it to the S&P, the white line that you see here, jagged, going up and down on either side of the zero line, that is the line representing the unweighted sectors, meaning that it's giving technology, XLK, the same amount of weight as, for instance, energy, XLE. And we know that XLK, tech, is almost 30% of the S&P, while energy is about 2%. You have sectors such as materials, real estate. Those sectors are also roughly like 2% of the S&P, as opposed to, say, financials, which are like 11, industrials, 11 or 12, whatever it is, et cetera, et cetera. So all of these sectors have different weights. So if you just plot the white line, you get an unweighted line. The histogram is weighted, meaning that when it starts at 0 at the beginning of the day, it takes into account the weights of those sectors, and in forming those histogram lines, it gives more weight on a proportional basis as much as it should to technology, healthcare, financials, etc., these sectors that are more heavier weighted in the S&P. And it plots those over the course of the day, again, starting from the open and measuring from the open. And these last 2 days have given us some fantastic signals, even though the market hasn't really done much. We've only had this for sale on our site for about 3 or 4 days now, but the signals have already been fantastic. And this is the first time that I'm actually putting it out there to talk about. I've only talked about this with our subscribers in our option advisories thus far, but this is really the big debut of this product, and we think it's fantastic. So let's take a quick look at what was going on just over the course of the last 2 sessions and how the S&P acted. So I've purposely set both charts to 15 minutes just so that the time frames are equal. I will say that in my personal preference, I like to keep the weighted, unweighted lines on a 5-minute because I feel like it gives me a lot more flexibility and I kind of see things faster. This has a lot of customization built into it, so you can change the time frames, you can change the way these lines are represented. If you don't like the histogram colors, you can change them. If you would rather that the unweighted line be the histogram or something else, there's like 5 or 6 different ways to plot it, you can do so. But the way I look at it is I put a white line as the unweighted, and I use a purple and yellow histogram as the weighted. Purple just means that the histogram the histogram bar rather is higher than the previous, and yellow means that it is lower than the previous bar. So notice if you match these up and you just look at Thursday and Friday, and again you got Thursday and Friday here, look what was going on in the indicator on Thursday, for instance. This is the activity of Thursday. And it was what? Basically bullish early in the day as you notched a new all-time high, and then just kind of flat for the rest of the day. And then you had a big liquidation break into the close, which really wasn't that big of a surprise. I actually talked about this early in the day, hours before it happened. I was pointing out what was going on in the weighted AD line of the S&P to my subscribers, and I said there is increased odds that we do get a liquidation break today. Why did I say that? Because of the divergence. Notice that the weighted S&P is very, very weak all day long, and the weighted S&P, it's positive, but it's very weakly positive. It's very low. There's just not very many heavy readings. And no matter what, the rest of the sectors, or I should say all the sectors that are put together that are unweighted, it can't get positive at all. So the first thing you want to know is whenever you have a day like that and you know that the weighted sectors and the unweighted sectors are not both pulling in the same direction, it should tell you right away. It gives you a very, very valuable piece of information to tell you that rallies are probably not going to be sustainable, or if the market's moving in the other direction, sell-offs are probably not going to be sustainable. You want to see these lines moving together, and when there's this huge divergence, as you can see, the big space between them, that definitely gives you a lot of information, and also how the histogram is starting to play out. Is it strong or weak? Do you have really big bars to the upside or not? Tells you a lot. And look what happens towards the end of the day. As soon as that weighted histogram goes negative right there, as soon as it goes negative, that's where the selling starts here, and boom, you get this huge liquidation break to the downside into the close on Thursday. And notice the confirmation here where now there's no divergence and everything's moving together in sync, and you have the huge push down of the weighted sectors confirming what's going on in the price action. All right, let's go over to Friday now, which is obviously just this piece here. And so now I'll just box off just that. And here on this line, we are looking just from here. We're looking at everything over here. Friday was a little bit more bearish than Thursday. And notice what our line is doing. Basically, Friday was the last trading day of the year. So obviously I have to say that as a caveat in that there's going to be some kind of weird stuff going on. But let's just say it was just like any other day. The market had serious difficulty rallying on Friday. Almost any rally that happened, if you notice here on the 15-minute chart, failed, right? It's 1 bar up, 1 bar down, 1 bar up, 1 bar down, 1 bar up, 1 bar down, all the way into here. And notice what the weighted AD S&P was telling us during that time. You had divergence, And also, you only had the unweighted AD line rallying, but the weighted was underwater, and the weighted was constantly underwater, and the histograms were actually trending down. So anybody that thought that they could buy a low here and get a move going to the upside was constantly getting smacked in the face. It wasn't working for them because they didn't have that, all the oars of the boat pulling at the same time, so to speak. They didn't have any of the weighted sectors positive. And notice that as the market had this little rally right here, what happened? For the first time during the course of the day, the unweighted line crossed back up over the zero line. That's not for the first time. It was actually doing it back and forth prior to that. But then for the first time, what happened here, the weighted sector started to get positive, confirming that little rally. And then what happens? You kind of go nowhere. You go nowhere. And as you're going nowhere, this is very, very interesting. As the market is going nowhere but sideways, look at what the unweighted line is doing. Climbing, climbing, climbing. So what's going on right there? You want to know what the ES is doing, and yet in the S&P, in the big picture, in the cash index, which really drives the futures, which is really, quote unquote, what's happening at the moment, what is rallying into the end of the day on Friday? And you can go back to sectors and look this up for yourself. Materials, real estate, energy, all crap sectors that are all, even together, all make up like 10% of the S&P. And then again, liquidation break into close. Why? Because that sort of rally is unsustainable. Again, caveat, I totally understand that this is the last trading day of the year. So some of this liquidation break here in the last 15 minutes of the day on Friday could have a lot to do with the exact day of the calendar. But notice how beautifully this points it out ahead of time, that you can see that that sort of rally is just not sustainable. And this works on all time frames, however you want to match it up, completely customizable, really a fantastic tool to let you know during the course of the day whether or not the moves that you're seeing are going to be sustainable or not. If you want to pick this up, I highly recommend it. We've got it for sale on our site. Just go over here in the navigation and you'll see it here under the Stocks tab, and you'll select Weighted AD Line ThinkScript. And it'll take you to this screen where there is a description and also a video all about it. 95 bucks, not too expensive. Definitely something that I think is going to be worth its weight in gold. I will tell you one last thing about this particular script. Some of this interpretation, and I've said this before about a lot of things in the markets, and this is something that I talk about to my subscribers all the time. Some of this interpretation is more of an art than a science. Do not get hung up or pigeonholed into that sort of firm mindset, that sort of rigid mindset of if this, then that. Well, it's got to be this, or why is the market doing this when the weighted sectors are doing that? There will be times where, of course, it's not going to be perfect, but in general, it is going to give you a huge piece of market-generated information that you didn't have before. So you want to be looking for convergence, divergence. You want to see what type of strength or weakness there is in the weighted sectors and unweighted sectors. And most importantly, if a move is going to be sustainable, you want to see everything moving together. If the weighted sectors are moving in a trajectory with the histograms right up underneath them and no delta between them, that tells you that all of the sectors of the S&P are rallying. And then, of course, as I showed you in the video, pay most attention to when you get divergence, where you have perhaps the weighted sectors rallying or falling down, and you don't see those weighted sectors coming in and doing the exact same thing. Again, huge piece of market generated information that I think you can use to your benefit. This is something new we just came out with. Again, we're super excited. ShadowTrader.net. Again, just click on the Stocks tab, and underneath it, Weighted AD Line for the S&P, $95. It's a one-time cost. It's not a subscription. You get to keep the script, use it all of the time. And like I said, highly customizable, pretty simple. When you purchase it, you will also receive a link to another video that I made, which is a video on interpreting it, kind of similar to what I just talked about of the Thursday and Friday, but I actually looked at it over the course of an entire week in terms of having the S&P underneath and the indicator on top. So that'll be helpful to you as well. All right. So again, weighted S&P for sale right now on our site. Super excited about it. And I hope it's of use to you and helps you in your trading in 2022. And that kind of brings me to the end of the video. I do want to say a little bit about Weekly Options Advisory because we had a fantastic 2021. But before I get into that, just a little bit of recap about what's going on here technically. I often talk in these videos, towards the end, I'll always tell you, okay, what is my position going into next week? And that's where this screen is helpful because it's all of the trades in a performance blotter of Weekly Options Advisory. And you'll notice that here along the left-hand side, where usually there are some green highlights, which means open, there are no green highlights. I have no trades on going into January. Again, I don't really know what's going to happen. We are seeing a little bit more bullish S&P, a more mixed up Nasdaq where you have those opposing tails on the monthly. The Russell's not moving at all. Me personally, I would rather wait a bit, see how those first couple of days in January play out before I start committing more capital to short-term trades, all right? Weekly Options Advisory, fantastic year. I'm not going to get too deep into it. I'm not going to bore you with a whole recap of the whole year, just to say that we did finish out the end of the year at our tip-top high watermark for profits. If you've been watching these videos week after week, month after month, you would have noticed that the number in the green box keeps getting higher and higher, and we're kind of pretty much always at our high watermark. So no major drawdowns during the course of the year. The statistics were great. I think we had about 70% winners in 2021. Average winning trade was 4 times the average losing trade. So it was a really, really good year. My plans for 2022, honestly, are just to do more of the same. Success in trading is a lot about finding your niche, finding what works, and then doing what we call rinse, repeat. Do that over and over. And the way to get better at it or bigger or make more money is simply to increase size, pay more attention, be more careful, be ever vigilant, don't get overconfident, and really just keep doing what you're doing. Again, a lot of good trading is just rinse and repeat. I do hope that more of you will join me next year. I can't stress enough how much I enjoy putting out these trades for subscribers. And more importantly, as I always say, this is an extremely comprehensive service that gives you an immense amount of alerts during the course of the day on what I'm seeing and what is important. Case in point, the stuff I showed you just before with the weighted AD S&P line. I know a lot of people don't have that yet. Obviously, we just came out with it on our website. That's a typical thing that I would be snapshotting during the course of the day and throwing up into my alerts that are coming right to your phone in real time and saying, hey, heads up, look at this divergence between the weighted and the unweighted as the market's trying to push higher. You know, potentially could fall apart here, et cetera, et cetera. That's just an example of the type of thing that I do. I'm constantly grabbing charts, marking off trend lines, etc. And I probably send out, 8 to 10, 12 alerts during the day that are just that type. And it's really just the most salient information that I'm seeing. I don't clog up your phone with a lot of BS. If I'm not sending you a trade and I'm talking about something in the market, it is really something important that you need to know at that moment because something is going to potentially shift really soon. And I want you to be safe. And I want you to be able to profit from it, right? So if you want to join us in 2022, I'd love to have you. The link is here down below, shadowtrader.net/options, or just click that little link up there in the corner of the screen, all right? On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, please click the like button, subscribe to the channel as well, and I wish you good trading, good night, Happy New Year, and I'll see you in 2022.